3 minutes to the closing bell. Timothy Chubb is CIO Girard, and also James Bruderman is 1879 Advisors Vice Chairman. They join us right now to get us to the bell. And let's start with you, James. I want to jump in on something you said about Tesla and Bitcoin, that, quote, they may be showing some signs of speculative froth. Maybe. I mean, Bitcoin over 40 grand a coin. With the estimates, it'll go to 100,000, but you think there's a pullback coming?
Yeah, I'm really not a big fan. I don't want to be the one to predict a pullback, especially with the Reddit crowd potentially watching. But with really nothing underpinning the value of those type of assets, it's just not something that I'd be adding to portfolios, and not something that, especially given its current rates, regardless of Elon's love for all things Bitcoiny. It's just not something that I feel has got a lot of staying power.
We've just around 2 minutes to go until the bell. We want to get to Jared Blickery for a closer look at some of these movers into the bell. Jared?
Yeah, let's go straight to the Wi-Fi Interactive, where we can see all of the majors plus the Russell 2000 set for record closes. And guess what? I said before, Russell 2000 heading for its best start to a February ever, but check this out. The Dow having the best start to a February since 1931. Got to go back 90 years for that. And just looking at the year to date in the Dow, still up only 2.4%, but sitting on gains of about 4.5% for the month. Now, here is the Nasdaq 100, where we can see not as much red around some of the mega caps as we saw an hour ago, but Apple and Microsoft basically unchanged. Amazon down about 1% off the most of that group, and Tesla up 1.2%. Definitely been talking about them. Some other outperformers, NVIDIA up 6% after Masa-san said that he does expect regulatory approval for that ARM sale to NVIDIA. That would be a huge transaction. Also PayPal, that is a crypto play, up 20% year to date, up 4.5% today, getting some of the Elon Musk Tesla effect. So let's go straight to our cryptocurrency heat map here, where we can see Bitcoin up 14%, hitting 43,000, almost hit 45,000 intraday. It's up 49% year to date, 14% today. Ether futures hitting the market today. That is up to a record high, up 8%. And also checking in on Dogecoin, whether it is a joke or not, according to Elon Musk, it is up 17%. Now, here's the sector action as we head into the closing bell. Energy just really knocking it out of the park as we see Brent above $60 for the first time in over a year. And here is that closing bell on Wall Street, guys.
And that does it for the trading day today. Again, all three of the major averages plus Russell 2000 ending in the green. The Dow closing up over 200 points. We saw some buying action into the close of the Dow up 236, S&P up about 0.7%, the Nasdaq up nearly 1%. Jared was just going through the sector action that we saw today. Yes, energy was the outperformer all day, up more than 4%. Also, oil hitting its highest level that we have seen in over a year. In addition to energy, we also saw some outperformance in financials and technology. The underperformers in today's market, utility and healthcare. We want to bring back in our market panel. We have James Bruderman of 1879 Advisors, Vice Chairman, and Timothy Chubb. He's the CIO of Girard. Timothy, let me just go to you about the buying action that we've seen and whether or not do you think this momentum is going to continue?
Yeah, it's hard to say. I think whether the momentum's going to continue here in the short term, but I think the backdrop for the rest of the year is really positive. I do question whether we've gone a little too far, too fast here in the short term. The big risk, as one of your earlier guests had said, towards the back half of last year was vaccine distribution. We've seen pretty impressive results, leading to us to believe that the economy will rebound pretty significantly as the year continues. But I think the bigger risk, the second biggest risk to the markets right now, is that the economy grows too fast. And Fed Chair Jay Powell has been really trying to make sure that the market understands that they are going to be letting everyone know in advance when tapering may begin. But we may be looking at that sooner rather than later if the labor market recovers as quickly as Janet Yellen implied this morning, and as recent or as early as 2022. And I think we could be maybe talking about tapering sooner rather than later, especially if the stimulus package is passed.
Tim, let me follow up with you on that, because everybody is saying we won't get any kind of tapering for at least another year. And while we do expect that there's pent-up demand and money on the side, one of the things that's happened is there's still 10 million people who are not employed. Now, I realize they haven't had to delever the way we saw, as you point out, in the great financial crisis of so many years ago, but they're still not spending money. So why do you think we might get the taper sooner?
I think everyone so far, including ourselves, has underestimated the power of stimulus. And I think, for us to be in the shape that we are in right now, coming out of a global pandemic with an unemployment rate at 6.3%, and I realize that numbers skewed a bit because of how much we've seen workers leave the labor market. I think the economy, for a lot of Americans, is actually performing extremely well. We've seen a lot of big tech obviously perform well, and they continue to be such a large part of the index. And I understand that's not a huge part of the economy, but I think as you have a lot of consumers who have been very fortunate throughout this, a lot of companies have been very fortunate throughout all this. Ultimately, with more stimulus coming back online for some of those sectors that require face-to-face interaction, that are more sensitive, I think Americans are going to be looking to get out this summer. It's going to be pretty incredible seeing the pent-up demand that we've seen, and I think a lot of those sectors that we still have been facing for relatively high unemployment rates will likely snap back more quickly than what the market is perhaps anticipating.
James, when we talk about Fed policy, of course, that points to what's going to happen with rates, whether or not we're going to possibly see inflation. What's your assessment on the likelihood that we will see inflation this year?
Well, I think we're certainly going to see a little bit more inflation than we've seen, but by no means do I anticipate that there's going to be runaway inflation. I don't think the demographics support it, and I don't think that the current stage we are in the economic cycle really supports it either. Certainly, we've seen some adjusting in pricing. Obviously the yield curve is steepened, and we've seen some increases in materials prices and oil especially. But I think that's more of an adjustment than a signal that that inflation can really get ahead of itself. I think with the unemployment rate we've got, with the potential for increased productivity, especially as 5G rolls out, I think we've got enough upside caps on inflation. And worst case scenario, I'm confident that towards the end of this year and early next year, that we're going to see some additional tax burdens that will help take the wind, if there is excess wind in the sails of the economy, will help keep that under control.
Well, James, some of the things that are showing us the wind in the economy, I mean, energy, that sector is starting to recover. It's now, for the last 52 weeks, it's down just under 20%. Last week, you could still quote it was around down about 25%, closed up 4% today. What are the sectors that you think are going to remain strong that you want people to pay attention to?
Well, I think that as the economy continues to improve, maybe we see a little bit of a rebalancing, so to speak, maybe away from some of the quality that people are more apt to hold in difficult times, and a ascendancy of some of the I wouldn't say necessarily speculative, but some of the later cycle assets, small caps, for example. I think technology still has a lot of room to run, especially, like I said earlier, about 5G. But I think overall there's a lot of room for productivity investments in corporate America. I also think healthcare has got a lot of opportunity. Albeit over the recent past and since the beginning of the year, it hasn't been doing very much. But there's a lot to be said for I think for healthcare, especially as we look forward.
Timothy, how about you specifically when it comes to technology? Because we've heard from a number of these large cap names over the last 2 weeks. Largely speaking, their numbers were better than expected. Are you still finding reasons to buy some of these names that have outperformed over the last 12, 13, 14 months?
Yeah, absolutely. And I think, to James's point, we've seen under the surface a lot of that speculative behavior, and a lot of the companies that you would anticipate benefiting from a cyclical rebound really start to outperform some of the secular growth stories that we've seen perform over the last 12 months. And so for big tech, I mean, their results were phenomenal. And you look at their net debt is, at very low levels. I keep thinking about what would happen if big tech were to lever up and start making some acquisitions to really fuel their growth for the future. But their core businesses are doing extremely well right now. And you look at some of the credit card processors, a lot of the big tech names that make up a large portion of the index underperform some of the broader markets. And to me, that's really some of the best value in the market right now, as we've seen this rotation into value and some of these lower quality cyclicals pick up. And, it's also coming at a time, and it's still the case, and it has been for the last 10 plus years now, where you look at how many dollars are going into the equity markets or entering, market cap weighted indices or securities, I should say. They're going to be buying large proportions of those big technology companies. And so, looking at the S&P, revenue growth declined 3.5% year over year. And then you look at the big tech that reported within the last week or two, seeing revenues jump anywhere from 20 to 40%, and still trading at, in some cases, below market levels ex cash. I think that's really where a lot of value exists within the market right now. Also agree with healthcare, especially in elective procedures. I think that's an opportunity. The whole sector as a whole, I think, is trading at 17 times forward earnings versus the S&P at 23 times this year. So, I really think there's a lot of value in big tech and some of these more defensive type companies that have run out of steam of late.
Okay, everybody, hold on. We're going to go to Jared because we have earnings from Take-Two Interactive Software, and the shares are selling off in the after hours.
Yeah, just slightly. And I've seen them positive as well. And I got to say, the numbers, the key metrics are looking really good here. And I'll go through those now. So starting with third quarter results, adjusted revenue came in at $814.3 million. Estimate was for quite a bit lower, $752.6 million. Digital online net bookings, a key metric for them, that comes in at $664.4 million, higher than the estimate for $631.6 million. Also beating out on physical retail and other net bookings. And their adjusted EPS came in at $1.24, and that's versus estimates of 95 cents. Now, they also had a pretty rosy year-long forecast as well for 2021. They're seeing adjusted revenue of $3.37 to $3.42 billion. That is well ahead of the estimates of Wall Street, that midpoint coming in at $3.28 billion. They're also seeing adjusted EPS for the full year at $6.05 to $6.15, and that is much higher than the estimate for $5.67. And then finally, for their fourth quarter forecast, they are seeing adjusted EPS 52 cents to 61 cents when the estimate was for lower at 43 cents. So let's take a look at some charts here. Still down after hours, about 1.5%. We'll dig into the report and also listen on the call to see what comes of it. But over the last year, definitely looking at a COVID play, up about 89, 90% over that period. And you got to think the comps are going to be a little bit difficult this year. So maybe that's what's entering investors' minds right now, as the share is still down about 1.8%. Guys?
All right, Jared, thank you very much. And thank you, Timothy Chubb, the CIO from Girard. Also, James Bruderman, 1879 Advisors Vice Chairman. We appreciate your closing the bell or doing the closing bell with us.